Hi guys, we'll hang out for a minute and let everyone get connected. It takes people a minute to come into the room. So everybody scramble and go get yourself a sip. Um, Anthony has a sip of his sip left. Chris scrambled and got his mug filled.
I couldn't in a mug, but it was a water glass before. But it seemed like for the sip, a mug seems like a better option.
Or a martini glass, but not yet for us.
Yeah, we're gonna
Now,
have to. We're definitely going to have to introduce some cocktails to the sub. It's been pretty tame so far.
oh, you didn't tell me you didn't want tame. How non-tame do you want it? We
We're
can
a we're a non-tameable crowd, I think. So, but
yeah.
we'll make sure that Untamed version comes out either Monday or Tuesday night in Boston. But hello, everyone, and welcome to the SIP, where industry insights meet in intentional conversation. This isn't just catching up over coffee, it's connection, collaboration, and real world innovation that help move mortgage forward. One of our members commented that the SIP was just about case studies, and it's so much more. We have seen strategic insights to roadmaps, both of our members and of our preferred partners. We've had the announcement of an acquisition where Ingenious acquired Simple, and we also had some success-based pricing rollouts that were first in the industry from True. So I would say that the SIP is much more than the real world case studies, but really a holistic picture of what's going on in the industry and helping us move it forward. So thanks to all of you who are joining us. I get excited about the lender members and preferred partners collaborating to better support lender members and clients, and equally excited about seeing TMC preferred partners collaborating to solve industry challenges and to find ways to move the industry forward. So today's episode is co-sponsored by two of our preferred partners, Figure and Longbridge. Joining us are Chris Mayer, the CEO of Longbridge, and also Professor Emeritus of Columbus Business School. And Chris is joining us from an undisclosed location, taking a little break out of a vacation trip with his family, which we appreciate. And then Anthony Stratus is the VP of Lending and Partnerships at Figure. So we will know when we say professor on the show today who that is, because it's not Anthony and it isn't me. Welcome, guys.
Thank you. Thanks for having us. Me, at least.
Great to be
Abs-
here with you, Jody and Anthony.
Awesome. Let's dive in. So, Chris, kick us off with an introduction and high-level overview of Longbridge and a little bit about yourself for the audience.
Sure. So it's great to be here, and we've in Longbridge we've been very, very happy to be working with TMC and now Figure as we kind of grow our business. So Longbridge is a lender that is committed to the responsible use of home equity to help older Americans have a better retirement. I have that down in one sentence. Every one of those words matter. Including the responsible use of home equity. But as you might notice, I didn't use the words reverse mortgage. So we actually offer a variety of products, although all mortgage products, to help older borrowers in retirement. We have a bunch of reverse mortgage products, including three that we launched in the last quarter, one of which has as much as 20 to 25% higher proceeds than you would get from a standard HECM reverse mortgage, and another one which allows borrowers to borrow against a portion of their home rather than all of their home. So if you want to take 30% of your home and use it to give to your kids, to save for assisted living if you need, or other things, you can do it. Both of those are first in the market products, and we're going to talk today about our HELOC for Seniors product. But as you said, I also teach. I taught for a long time at Columbia Business School, and in fact, the work that we're doing at Figure goes back to the days when I was a Columbia professor. And we can talk about that in a little bit.
Oh, tell the
Awesome.
story, please. What a
Yeah,
great
go
segue.
ahead.
Well, it turns out Michael Tannenbaum was a student of mine. He showed up in my office at Columbia. When he came to Columbia, he said he was really interested in doing more with mortgages back in the day, when it was coming out of the global financial crisis, working on policies related to how to fix the mortgage crisis. And at one point, he and I worked together on a number of things, including his thesis. But some of the research he did, we once calculated and mapped the number of borrowers who are underwater in every congressional district in the country, so that politicians would understand the extent of the problems and how important it was to think about helping Americans who are facing challenges in mortgages. So I worked with Michael, and the product we're going to talk about, HELOC for Seniors, came out of a breakfast that he and I got together for breakfast for a number of years, well before he was CEO of Figure, back in the days of SoFi and Brex. And we got together for breakfast. We were talking about trying to create products to serve older Americans in the HELOC market he had. We talked about this new product, HELOC for Seniors. Longbridge has had that domain since 2018. And Michael went back to the office. He called me an hour later and said, "We're in, let's do it." And that was about a year ago. And it took us a while to get going, but that's how this product got built.
Exactly.
That is awesome. Before we go further into that, Anthony, you've become a familiar face here on the SIP. So for those of you who don't know you, give us a quick intro and share how Figure supports the mortgage space.
Absolutely. And thanks for having me again. It's always a pleasure to be here talking to this fine group. So on my end, I run the lending partnership channel at Figure. Last time we got on, and what most of you would hear from me is that, Figure is a fintech that has developed one of the leading HELOC products in the market. And beyond having just the originations capability that allow a HELOC to be manufactured quickly, efficiently, in a really customer-friendly way, we also have a pretty deep capital markets ecosystem that we let our lender partners access. So really, it is a true end-to-end solution. All of that being said, our underlying objective, at least in the HELOC space, and will be the same for other products as well, is to enable our originating partners to do these loans in their name, in their brand, in an end-to-end fashion as much as possible. And I think what you're going to hear about today is an example of Figure actually doing even less than that in a way, because what we're actually doing is providing the technology and the platform for Longbridge to do many of the things that Chris is going to speak to. And it's a testament to our philosophy that we want to be the engine that powers it rather than the biggest HELOC or other lender in the world.
Yeah, and I'll also say, just in learning about Figure's technology, not only do you put the power in the hands of the lender, but you also give them a really industry-changing technology to be able that it can efficiently handle the loans and move them to make a decision quickly. And it's like, get in, move on, or you can't move forward, and you know that in a very short period of time. So the technology too is a huge benefit to the industry. So I'll give Figure kudos to that, Anthony. You don't have
Thank you.
to. You don't have to. You don't have to give yourself those kudos. So Chris, let's talk more about that senior space. We already heard that you're a data guy, and you have a lot of statistics and information that you can help educate us on. So before we go into the product, what do lenders need to know about the senior market? And can you share some of those statistics that you previously shared with us?
Sure. And let me just first say we're very happy to be partnering with Figure, with Anthony, and the idea of having cutting edge technology, which is not only about the borrower experience, but over time is going to build out a technology infrastructure to allow people to access different kinds of trading, to do things on the blockchain, and even think about accessing, crypto, other kinds of markets. Really, Figure is very much at the forefront of this, and we're happy to partner with them. Although this is not a crypto product. So what we are, HELOC for Seniors, is a very straightforward product, and it is, as you said, Jody, an enormous market. So I am a bit of a data geek. I will tell you that if you look at the size of the market, last year, lenders made 284,000 loans that were either that was a line of credit, and if you include cash out, if you include closed-end seconds, the market is larger than that. But they made 283,000 line of credit loans and denied 120,000 line of credit loans just to borrowers who are 62 and older. Or I guess the ones who were denied were would-be borrowers who are 62 and older. If you include closed-end seconds and you look at the average size of the loan, you're ending with about $100 billion market. That was $100 billion of applications by people who are 62 and older looking for a way to cash out of their home equity last year. And if you look at where most of those loans were done, most of those loans were done by credit unions, by banks, and much less so by IMBs. But for those loans, the lion's share of them were second liens. They got a loan from somebody, many of them, from somebody listening to this webcast, or from one of their partners or family members or friends, was connected to somebody who's listening. And that market is really a market that all of us should be tapping and thinking about. And having left tens of billions of dollars of cash sitting on the table, we decided that we needed to develop a product that was specific for that marketplace. So if you look at the people who were turned down, the average person who was turned down had a debt to income ratio in excess of 50%, 50%. And the reason is pretty simple, which is if you're 62 and older, your income is likely falling and has fallen, but you still want to tap your home equity. And so a HELOC, particularly a traditional bank HELOC or a closed-end second, where you have to amortize a loan, means your payments are not just paying interest on the loan, but you also have to pay back the loan over time. But that's exactly the opposite of what people in retirement should be doing. People in retirement should not be paying back a loan, because in retirement, that's the equivalent of forcing somebody to save money. So lenders have traditionally had products that only force people to amortize or pay back the loan. HELOC for Seniors is the first loan in the market in the United States that we're aware of that is interest only, not just for a fixed period of time, but is interest only for as long as the borrower lives in the home. And there are provisions, if there's a spouse, to continue to be able to stay in the home even after the borrower passes. And all they're doing is paying interest on the loan. That lowers the payments. That reduces the burden for people whose incomes are flat or falling. And it makes it easier for people to qualify for the loan to begin with. And so that simple idea becomes a very powerful product, which is what HELOC for Seniors is. First in market in the US, although if you go across the pond and you look in the UK or Australia, the product exists. It's called a retirement interest only loan. You can find lots of information about them. But in the US, this is the first time this product has been made available.
And huge opportunity from a market perspective when we've been talking about a market that has been struggling for the last 2.5, 3 years. And we often think, we hear loan officers say, I need more products, I need more products. And this definitely seems like an area that with a little bit of focus could be extremely advantageous for all lenders. Anthony, how does this offering differ from Figure's core HELOC products? Is the workflow unique? And remind us of what the average time from application to close is on Figure loans.
Yeah, so if you don't mind, I'll talk about how it's not different, right? So the customer experience, the automated underwrite, the 5-day to close All of those are reasons why Chris and Longbridge came to us in the first place, because of the experience that we provide and the standardization of the loans that we're creating because of the automated underwrite. All of that is intact and in place. I think Chris really hit upon the main differences, right? Unlike a more traditional HELOC, there is no set term to this loan. It can go as long or as short as it needs to be based on the customer's need, and it is interest only for life, which does create a product where the payment is lower. And Chris, being a data guy, he gave some metrics on sort of the HELOCs that are out there. I think you'd be surprised at the average age of a typical Figure consumer. It's not folks in the 30s and 40s, despite it being a tech forward product. It's generally in the 50s. And so the market is already telling us that as folks approach retirement age, there is a desire to tap equity. And I think this is a really elegant way of delivering that. Some other differences are going to be on the LTVs that the product offers. We mentioned the term and the interest only nature, but honestly, from a customer's perspective, the look and feel and what most people know about Figure is very much intact. And most importantly of all, this is a full Longbridge product. It may be powered by Figure, but it's their baby. Hey, you're muted, Jody.
Yep.
I didn't want you to hear my ice rattling around when I took a sip. And then
I'm going to take one too.
Good thing I didn't go on longer, but Chris, we were talking when we were prepping for the show about how many lenders say that they are creating customers for life, but really what they are creating are customers until they're 62. And you really have a niche opportunity to continue that relationship. And you talked a little bit about how Longbridge and Figure met and began to partner, but tell us a little more about the relationship and where you see the relationship leading to in the future.
I mean, the first thing, as Anthony said, we were looking for a partner that we could, that had as good a borrower experience as we can have, because it's incredibly important for that experience to go well. I do think in terms of the size of the market, there is this sense that people talk about customer for life, but customer for life is only, what they really mean is a customer as long as you're working and making a certain kind of income. If you look at data, for example, from Harvard, to pitch, TMC is going to be in Boston, and next month we will be there as well, and look forward to seeing many of you there. But data out of the Joint Center at Harvard, and Chris Herbert is actually going to be speaking, who's the director of the Joint Center. They run a study, the state of the nation's, I think it's older homeowner or older Americans for housing, and their data shows that 7 million people age 65 and older spend more than 30% of their income. 3.5 million spend more than 50% of their income on their home, with mortgage payments being the biggest component of that. And so for those people, the kinds of products that I say we as a mortgage industry offer them are not suited for the needs of those borrowers. So it's no problem to say, look, it's very tough for somebody to save 20% down. So when you're younger, we're going to create a product for first-time home buyers, or products, many of them, that help first-time home buyers get into a home without saving 20%. It's pretty hard to save 20% these days and to be able to make the payments. And nobody thinks, that there's anything strange about that. As people get older, they buy a home, then we have great cash out products for them. And then all of a sudden, when they hit retirement age and their income is going down, not up, we just sort of say, you know what, we don't really have anything for them. But those homeowners have $14 trillion with a T in home equity, and 33% of all homes in the United States are owned by people who are 65 and older, and that number is going up a few tenths of a percent every year. So in the next 10 to 15 years, we're going to be closer to 40%. And so if you want to have products for somebody, for a lifetime, for borrowers, you can't forget about the fact that when you hit your 60s and 70s, there's a lot of demand available, but you've got to have products that meet the needs of those borrowers. And that's what we're really committed to as a company. And I think what we found with Anthony as well is the same thing. People in their 60s and 70s are completely comfortable with the technology. That's not the barrier to anything you're doing. And in fact, they look at it and say, if you don't have that technology, why not? And that's very much how we look at the world.
Yeah. It's amazing that, we still hear that people won't interact with technology to do a loan. And we just need to get out of their way. I was with my 81-year-old aunt last night, and she was showing me something I didn't know about the iPhone. And it's just like the world has definitely changed when your 81-year-old aunt knows more about iPhone operations than you do. Anthony, to you, what makes the partnership work in your mind, and what are you most excited about moving into the future?
I mean, we are absolutely thrilled to have another example of a different product that's built upon the same foundation that we built for HELOC. It's kind of the exact thesis that we want for this company. It's an example of how we can pivot and actually add additional mortgage or more broadly lending, crypto, and other products that deliver the same experience, the same technology, heck, even the same blockchain-based capital markets ecosystem on the back end, which Longbridge will be leveraging on their side, and developing this in a way that we can actually offer it to additional lenders, right? So, I'll leave it to Chris here in a moment, but day one, right, we're originating loans with Longbridge, we're helping them. But I don't think that this is just a purely direct to consumer play on Longbridge's part. The whole idea is to use this technology to connect everything from the brokers that are out there to other larger mortgage companies using the Figure technology with companies like Longbridge that are innovating and coming with additional technologies, and so additional products, excuse me. And so that is just amazing for us to see. And it's the first really public example that we have of a mass market product such as this HELOC for seniors that will open doors, I'm sure, for more opportunities for us.
That is awesome. And Chris, you hinted about this earlier, but sometimes we need to hear it more than once. Benefit does the product offer lenders? And what's the second look process if a borrower doesn't qualify?
So from a lender perspective, there are lots of different ways that you can interact with your customers. Many people have, very targeted campaigns for past customers to sort of say, here's a new opportunity for you. And we're starting to see people design this. I should say, by the way, that the product is still in kind of beta, which is to say we're in California. We just launched in Florida and Arizona, and we're launching in a bunch of states with Longbridge Retail. And we will in September, we expect to be launching the wholesale version of the product. And so this will be, we're already talking to people about working on this, and we've been working with some of our large wholesale customer and some of Anthony's to kind of have an initial phase, and we expect to be, expanding and rolling out over the course of the year. So the product is in market now. You can find out about it if you go to helocforseniors.com or to Longbridge's webpage as well. So you can find out a little more about the product at that point. But we are going to be rolling it out in phases because it is, there's a lot of work and testing as you develop a product. But the kinds of things that people do in marketing, Figure HELOCs are all available. So you can market online, you can market on social media, you can market through servicing platforms to customers. And loan officers have lots of options. We have people who are, where customers have questions. We have teams of folks on our end and also the fulfillment side with Figure, who, if people have questions, et cetera, that are available to help walk them through parts of the process if they have questions. But it is a product that can be sold lots of different ways and highly efficiently. We've also been talking to some of our rejected borrowers. That's where we've been starting our marketing. and we found a lot of people where there's a lot of potential for products. I will also say on that front that we found that we expect that a lot of HELOC rejected borrowers are really good customers for reverse mortgages. So remember, I told you there were, probably about $30 billion of rejected HELOCs last year of people 62 and older. Of that 30 billion, our estimate is 30 to 40% at least would have gotten a reverse mortgage, and a majority of the people who got HELOCs. So we think over time, people whose income is declining or don't have the income to do a HELOC are great customers for reverse mortgages. And so we've been working with some of the largest, lenders and many, customers of TMC to basically have an interface between the reverse mortgage team and the people who are out marketing and selling, the larger set of products. And by having an ecosystem where you offer a whole suite of products for people as they get older and as their income declines, that truly is what you said, customer for a lifetime. You truly have products to serve people over time. And so what we've been working on is how do you kind of pull those things together and use rejected borrowers from one program to offer them another product. And the more you can take the existing customer relationship and serve them, or people that aren't customers, they were rejected but should have been, you need to offer them a variety of products. And that's the kind of thing we're really excited about. We've made some progress on, but we see a lot more potential to build and grow that marketplace.
Yeah. There are a lot of different scenarios where, lenders are clients of Figure, or they're clients of Longbridge, or they're clients of neither. So Anthony, we're going to start for existing Figure clients. What's the process for them to integrate and be able to take advantage of the Longbridge HELOC for seniors?
Sure. So on our end, what we're doing is we're trying to look, one of the biggest benefits of our platform is that we have hundreds, thousands actually, of loan officers that are familiar with how to submit a file through the Figure platform, how to run an inquiry, et cetera. We're trying to keep that experience almost identical when they choose to access the Longbridge HELOC for seniors. On our end, if you're an approved Figure client, essentially there'll be a drop down on the screen that you use to price out a file that sort of says, hey, if I want a Figure HELOC, you'll pick Figure. If you want a Longbridge HELOC for seniors, you'll change the drop down and send it to Chris. So if you're an existing partner, I'd urge you to reach out to myself or to Longbridge. We're happy to have a conversation and go through what the product is and sort of get you set up in that September-ish timeframe. But as of right now, as Chris said, it will be a wholesale program where loans will be brokered. We've definitely had interest from larger companies that currently correspond with Figure, some of which are members of TMC as well, actually. And I think eventually we will figure out how to do this on a correspondent basis, which is what the larger companies are accustomed to, but we're not quite there yet. We sort of have to crawl before we walk, before we run.
Yeah, it does give your loan officers the, appropriate amount of time, though, giving them some time to really figure the product out without taking on the full risk, and really having that guiding hand, I would think would be important to lenders. And then Chris, for that September timeline, I mean, we're just 5.5 weeks from conference. We're less than 4 weeks from September. For those that are not signed up with Longbridge, should they go ahead and reach out and start that process so that they can be ready to go on a wholesale basis in September?
Yeah, they can. If you're an existing Longbridge customer, reach out to your account executive. You can go to longbridgefinancial.com and go over to the wholesale page to get more information, or you can, if you connect with me or Adrian Prieto, I think Bill Nolan are both going to be at TMC as well. I'll be there, so we'll have a pretty strong presence. So lots of different ways that you can reach out to us to get more information. We'd love to work with you. For us, quality partners are everything, and Figure and TMC are the kinds of people and groups we want to be working with as we try and develop long-term relationships.
That's awesome. That's a wrap. We are at the end of time. So thank you very much for Figure and Longbridge for sponsoring today's show. And thank you, Chris and Anthony, both for your insights. And to our listeners, thank you for your engagement as well. We'll be back Tuesday, August the 12th at 2 p.m. Eastern for our TMC community and 4 p.m. Eastern live on LinkedIn. And if you enjoyed today's conversation, you want to have that transformative meeting with our friends at Longbridge or Figure at the TMC conference, get registered and also get your rooms because rooms are booking up quickly. And if you're not a member of TMC and want to find out what you need to do to become a member and what the benefits are to you, please reach out to me. And until next time, cheers from all of us at the SIP. Thank you again, Chris and Anthony.
Thank you.
Bye-bye.
Bye.